Good morning, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. So I want to welcome you all back. So let's go ahead and get our morning analysis out of the way, especially as we prepare for durable goods orders. And let's go from there. So let's take this euro dollar. Okay, so here's the euro. We're at 108.29. I think the biggest fears right now that I see for the euro dollar, like I said, is the false break overnight. Again, you have to take it from a perspective of somebody, North American traders who are just sitting in front of their computer right now, going, "What the hell happened overnight? That looked like a squeeze play." That looks like a real nasty squeeze. I don't necessarily want to short it right now, but man, if we get back below here, that acceleration is going to start to pick up. So I'm sure that makes sense to you guys. It makes sense to me. So let me get rid of this stuff because we don't need this now. That's after the fact. That was from yesterday. Okay. And yesterday, remember, we talked about the trifecta of bad data creating that breakout in the euro. It did. We had 3 pieces of bad data. It took a little while before it broke, but it was like 30 minutes after the fact, once that bad data really resonated with the market. We broke above 108. Remember, we were here yesterday and said, we're going to need either 3 pieces of good data, push us lower, 3 pieces of bad data will push us higher. We broke above 108 and we came down, confirmed the breakout point, rallied. Now, the problem that I see is, again, you got people stuck long up here. And if for some reason you break back below here, that's where all the stops are at. Okay, so that spike low overnight is 108, 107.85. You guys have to excuse my my nose. My nose is running and I cannot find it. 1.0785. Okay, that's going to be support for today. Resistance is going to be, back at 109, but even if we get above 109, 109 and a quarter, but 109, it seems like, and let's get rid of this, and I'm going to reuse that line rather than drawing new ones. Okay, 109 is horizontal resistance. Even if we make it above 109, you got a 109 and a quarter, which is a 786 retracement too. So don't get too carried away with getting on the long side of the euro above 109. 1.0925. Those are all resistance levels. Now, if the data out of the U.S. is a weaker piece of data, again, weaker durable goods orders, that's what's going to create a move up towards these resistance levels. And you might be thinking, well, if we get up to 109 or 109 and a quarter, you might be asking, hey Blake, are you gonna short the euro up there? I don't know if I would do that today, not on a Friday. I mean, because if we have like, let's think about this for a second. Let's say the data is weak and the euro starts to rally again, and we rally up towards this resistance. It's a Friday afternoon. If we end the day higher here at 109, 109 and a quarter, we could theoretically gap up. You got some good Greek news. We could gap up towards 110 or 109 and change and continue to break out. You'll have a lot of momentum carried from the end of this week going into next week. So I wouldn't want to short the euro if we rally up there. So I'm just letting you guys know that unless it's intraday, it's not something I would hold. Let me just put it that way. Not on a Friday. So if we get back up here, I doubt it. And plus, you also have to think about, you might say, well, Blake, would you short the euro and stay short? I don't know about even holding positions in the euro right now, especially over the weekend, because with these Euro group meetings, we could have talks completely fall apart. We can have talks really accelerate and get better, and so you don't know. I think there's a lot of risk in holding euro positions over the weekend. Now, cable, maybe a little different story. Let's go over to the pound. So the pound dollar, we are basically where I shorted the pound. I shorted the pound basically right here. Okay, at 151.25, and I'm looking to add too. If we can make it a little bit higher to this 161% extension. And matter of fact, let me check something else. That's beyond extension there. We have another 161% extension above 152, but I have a feeling if we break above 152, we're going a lot higher. Um, the the pound dollar is coming into major resistance. This is a game changer for the pound. What I mean by game changer is if we break above 152 and we can sustain a break above 152, that to me is a game changer for the cable across the board. So I'll be looking to get back into the pound New Zealand. I'll be looking to get in the pound Canadian. I'll be looking to get in the pound Aussie, more on a substantial basis. Right now, because the cable's getting up towards resistance, I'm a little hesitant here about being long the pound uh, on the crosses. Okay, so 152 is going to be, or we can say 151.75, which is the 161% extension, which this is 62. So 151.75, I'll just put as resistance, and it's critical. 151.75. Remember, support and resistance is not an exact science. Okay. It's not an exact science, but it's that area should generate some really good selling interest. I'll have more sell orders up there, I'm sure. Okay. Um, let's go over to where's support. What turns the cable? What turns the cable? What would trigger selling? Is what I'm trying to ask. Right below there. So it looks like we're flagging on an hourly chart, but a move below 150, let's just call it 70, that would create some selling. And this currency pair, believe it or not, is very close to turning bullish. Still a range environment as far as I'm concerned, but is very, very close to turning bullish. Okay, let's if this flag plays out, has the potential. Let's see where the flag would play out to. If that flag plays, it has the potential to play up to 152 and change today. If it decides it, it's going to break out like that. That I would think would be that would probably be the top of the move or the extent of the move today. If it's squeezed, like it's squeezed above 152, like if I got stopped out above 152, it'd probably head up all the way up to 152 and a quarter, before stalling. Okay. All right. Let's go over to the. Did I get everything down? Yeah. Okay, let's go over the Swissy. So I was shocked yesterday, which was really a bummer because I made such great money on the Kiwi on the short side yesterday. I gave back all of my profits on the stupid Swissy yesterday because what I did is I bought the Swissy here, thought I was smart, bought it right here, boom, and then the Swissy started to slip and it started to fall, and I went to eat breakfast or grab a bite to eat, and literally by the time I got back, it had slipped all the way down here into the 80s. I picked up a little bit more, and then I ended up just exiting, through here. So I bought some here, and then I bought more here at the 618, and I should have just stuck with it, I think, but what we did is we just continued to go down. I'm like, man, the dollar looked like it was going to get pulverized yesterday, so I just took my losses there, and I gave back all my gains that I made in the Kiwi on the short side yesterday, which was very frustrating. But I could not believe this move in the Swiss yesterday was so aggressive. That to me was a shocker. I did not expect that out of the Swissy, especially after um, the, the 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 first day. Now Dan just said something, and I have to stop here for a second. Dan says it looks like the beginning of a head and shoulder pattern. Everybody answer me, why is that not a head and shoulder pattern? And Dan, I'm calling you out, but I'm not doing it to be a jerk. I'm calling you out so I can um, help teach you a lesson. Okay. Okay, everybody's answering. I've got 1,000 answers. Okay. Head and shoulder patterns, first of all, head and shoulder patterns are reversal patterns, not continuation patterns. Okay. Head and shoulder patterns are identified at the top of a trend. Okay, they are reversal patterns. You look for a head and shoulder pattern when you're at a top of a trend, head, shoulder, shoulder, because they reverse the predominant trend. They are reversal patterns. Okay. When you're in a downtrend, okay, when you're in a downtrend, you look for inverse head and shoulder patterns, shoulder, head, shoulder, because they are reversal patterns of downtrends. That's what an inverted head and shoulder pattern is. They are not continuation patterns. Okay, they're not, and there's no arm here because you always need an arm. If you're gonna, how many one-armed people have you seen? Well, no need to answer that question. When you have a head and shoulder pattern, you need an arm, so you have to have a measure to complete. So when you break the neckline, you can go, okay, well, the distance here of the arm is usually the distance between the neckline and the head, and you have to be able to complete that on the other end, so you have a symmetrical little, man, body, head, crazy hair person. You know what I mean? Okay. So, hope that made sense, Dan. He said, "Oh, I meant on the daily pound." Oh, of course, we're talking about the Swissy, and your comments came out right as I was talking about the Swissy. So we're not even talking about the same thing. Okay. Well, hey, good news is we he said, sorry, those are late comments. No problem. Well, the good news is, hey, maybe some people learned some things today. That's good. Let's go. Let me go back to the daily on the pound. Beginnings of a head and shoulder pattern. Inverted head and shoulder pattern. Yeah. Head, shoulder. Where's the symmetry here? Unless we do this, unless we do this, which we have a lot of work to do, we'd have to come all the way down here and then reverse or something like that. Come down here. But that would be a little headed troll head, which you don't have much of a, I don't know. I think we're thinking way too far ahead. All right, let's go back into the Swissy. So the Swissy, okay, here's the Swissy, and the one thing I can tell you is we have very strong support here. Now, we are in a, triangle. Excuse me, guys. Okay, so we're still in this triangle, and it's a bearish wedge rather. Okay, so really critical support is at this 94.75 still. Okay, so support 0.9475 asterisk. Okay, resistance. It's all the way up here at 97 cents. Obviously, but we're not even close to dealing with that today. Resistance for the Swissy, should we get a bounce? Okay, like let's imagine the dollar starts to squeeze higher. Let's just pretend that happens. Okay, if that's the case and that's the low, then resistance is probably going to be here at the 50% retracement, because You can see that spike right through there. Okay. So I'll be back at 96.15, even right here at 96 and a quarter. So any move back up here, you're probably going to get the people that were like me yesterday that was buying. Some people didn't get out. They're probably just, they'll be happy that we get back up here and they're like, God, thank God we made it all the way back up there. Get me out of this thing, you know? So I would say 96.15 or so is probably going to offer some resistance. Not great resistance, but again, we're still in the range. Let's go over to the dollar yen. So the dollar yen got hammered yesterday. We bounced back. We hit the 618 and bam, that's important. Okay. 119.10 or 11, and this is very easy to read. We're still in a range. 119.70, 119.15, or 119.10, 119.10, 119.75, and we are range bound, aren't we? Range bound. Okay. Let's take the dollar Canadian. Mike said the dollar Canadian was on the move. I looked at the dollar Canadian. That is a true sign of a super scalper, Mike. When Mike sees a 121.32 to 121.22 move, Lou N says, please stop slurping your coffee. You know what? This is for you, Lou. And if you don't like it, mute me, please. He said, I knew you would do that. Kelly says you drink like a horse. Don't piss me off. It's Friday. Dang it. TGIF, people, by the way. TGIF. Okay. So here we are on the Canadian. So one thing I was really surprised with yesterday, and I have to say this. So let me remove everything, and we're going to take a little bit bigger look or more detailed look at the dollar Canadian. So first of all, yesterday, I was surprised with all the dollar weakness that we saw. I was really surprised that the dollar Canadian didn't hit new lows. I was really expecting the dollar Canadian to hit new lows. Now, I think the new lows are going to be fairly limited from here, so let me explain to you what I mean by that. So if you take this range extension, this one right here, okay, so you got this range, right? That clearly that we were in and we popped out of. So, which we never made it back to 123.50, which was really a bummer because I've just been wanting to sell a 123.50 rally. We just have been stopping shy of that because I think everybody is expecting to sell it short here. We've been expecting if we can get it up there, let's short it. But notice this 161% extension is at this 120.50 level, and see that resistance that we were right there. I was thinking, well, if we break through this, I want to buy this. I want to buy this for a bounce. I want to do boom, buy that as a bounce. We just yesterday we didn't break, and I was surprised. I was surprised that we hadn't done that. Now that doesn't mean we're not going to, but see, we're holding the 786. We held this yesterday. We didn't break into new lows, and that was fairly impressive. And here we are right now. So what's the spike low here? 121.10. Okay, so we have basically 121.10, 120.85. It's 85. So I'm going to write down two levels of support here, especially if we get some dollar some, really poor um, uh, durable goods orders, but one or 1.21, no, 2085, 1.2110. Okay. So just key support levels are there. Resistance, hold on one second. Check something. Okay. Key resistance is going to be any rally back to here. This is not because it's a 618. That has absolutely nothing to do with that. It's just any rally back up to here is going to find sellers because this is previous support. So that'll be 21 and 3/4. And if we get a stab lower in the dollar Canadian, I actually want to be a buyer at 120.50. Not today, but um, next week, more than likely. So again, I'd really want to be a buyer down here sometime next week if we can get it. Like, let's say these durable goods orders are kind of weak today. We make one more low. I'm going to get long for a bounce. That's what I'm going to do is I'm going to try to buy it down here. Hopefully sometime next week. Let's see where we're at. Let's go over to the Kiwi Dollar. So here's the Kiwi. Now, this is surprising. Not really super surprising, but with the pound that surged to 151.50, yeah, the euro surged to 109. The Kiwi can't get out of its own way. The reason, does anybody know? I already told the people and the Wise Trade Alert people why, but if you're not a Wise Trade Alert or Wise Trade member, why is the Kiwi underperforming right now? Can somebody tell me? Give me some reasons. Why is the Kiwi underperforming? Go ahead and rattle them off. We're going to take a break here in just a second anyway. So Dan says, or no, Kelly says the RBNZ is talking it down. Yeah, that rhetoric is definitely weighing on the Kiwi. What else? Adi says because of the Aussie New Zealand. Yeah, that could be a partial reason. What else? I think it's a majority. I mean, if you guys haven't seen the cross rate, you haven't seen the cross rate effect. Cross rate effect is extremely important when you're talking currencies. Look at the pound New Zealand. That's been, and like I said, I just got out of it this morning, and I mean, I just took my profits here at 2. But look at this huge move in the pound New Zealand. Look at the euro New Zealand. Huge rally in the euro New Zealand over the last couple of days. Look at the Aussie New Zealand. Here's the Aussie New Zealand. Huge moves in these cross rates. And so if you don't think there's going to be a cross rate effect, I mean, it's coming directly into the New Zealand. The New Zealand is underperforming big time. So you know what the problem is here with the Kiwi is the problem with the Kiwi is if we start cracking, the support here, it's going to get ugly. So you got to watch this Kiwi really closely today. All right. Watch this Kiwi. If we take out this support through here, anywhere between 75.15, what's this low here? 75.35, 75.15. We take out those levels, and man, this thing's gonna go for a tailspin. All right. So if durable goods orders are strong and the dollar strengthens today, watch out. This Kiwi is threatening to break down. Okay. 0.7515, 0.7535. Those are all important support levels for the Kiwi. Like I said, we get a strong durable goods orders. This thing's probably gonna fall apart at the seams today. That like is um, one of it's like the Kiwi's got a target on its back today, and I've got my crosshairs on it. Okay, uh, 76, and we're still in a range, but this is has the potential to turn into the lower end of its range. So the problem is if you're out there trying to buy the Kiwi, you have to look at the cross rates. I mean, like the reason why the Kiwi didn't rally yesterday or hardly rallied is because it was getting pounded on the crosses, just absolutely decimated on the crosses. Um, all right, so there's 76, 75, like I said, 75, 35, 75, 15. We break those levels and it's going to get ugly. All right, I'm going to take just a minute or 5 minute break, and then when I come back, we'll do the Aussie, the dollar index. We'll take a look at some of these. We'll take a look at some of these uh, maybe Nordic currencies because the Nordic currencies are threatening breaking down too, because they had those false breaks yesterday or the last 2 days. So we'll look at those when we get back. Don't go anywhere. Kevin, Kevin asked, Blake, are you still short the Kiwi? I'm not. I mean, the New Zealand yen, but that doesn't really count. I'm not short the New Zealand dollar. I will short the New Zealand dollar today. If we see some dollar strength, that would be one currency I'd be more than happy to short. Because, like I said, it's getting killed on the crosses. So if I'm gonna play a dollar long play, the New Zealand dollar is like, I already shorted the cable. I'll short the Kiwi too, but the Kiwi's too close to support right now to do it. I need to make sure that we got some good data to confirm that. All right, I'll be back in a moment. Don't go anywhere. Alrighty, traders. This is Blake Morrow, and you are listening to the Morning Edge. All right, so we still have the Aussie and the dollar index to do. So let's go ahead and get to it, and we'll see what else we've got. So let's go over to the Aussie dollar, and so here's the Aussie. We Okay. Let's take a step back for a moment. So here's the daily. Now you guys know that this daily channel is probably, in my opinion, most important thing that we're looking at right now. This yellow channel here. All right. We have this up channel that's also developed, and that's holding us up. We had a triangle trying to break out. This is very similar to the dollar index. Yesterday we actually stalled. If you guys look at the hourly chart, yesterday we actually hit this is us yesterday, okay? We hit the 77.90 resistance, and we finally started probing above there. You can see these are just big probes, and relative strength is diverging as we keep doing that, okay? I'm going to delete this triangle for now because I think the dollar is probably going to, or the Aussie is probably going to be more of a product of what happens to the euro versus anything else at the moment, and it's very messy. So I don't want to take that away from the Aussie dollar because I think it's an extremely messy currency. I have no aside from being long the Aussie New Zealand, I don't have any real, and short the Aussie yen. So in essence, I'm hedged as far as the Aussie goes. I don't have any desire to trade the Aussie dollar at the moment. Okay, so the Aussie dollar, like there's no interest right now for me to trade it. Like I don't see any reason to do it. Now, if we get a rally up to 78.40, that might pique my interest. If we get a sell-off down to 77 cents, that might pique my interest, to play the channel lows. I look at the Aussie and I'm not really too convinced one direction or the other that I should be trading it, for any particular reason. I mean, we could be doing, this for crying out loud, it's a very tough currency to read. In my opinion, there's not a lot of direction here. I think it's kind of messy on the crosses. You got the pound Aussie that can't move. You got the Aussie New Zealand that's rallying. You got the Aussie yen that's bounced back. but it's, has, risk aversion might be weighing on it a little bit. So it's kind of messy. So anyway, my, I mean, you guys can trade the hell out of it, have fun. For me, I don't really find it very interesting. We get it up to 78.40. Like I said, I might be interested. We get down to 70, basically 77 cents. I might be interested there. For today, these are probably your likely parameters today. Between 77.60, you should probably find some buyers, and 78.40. I don't really see anything to do here. 77.40, right? Is that what I just said? Oh, 78.40, 77.60. Wait, hold on. Let me make sure I did that. 78.40. Damn it. Okay. And I believe we're in a range environment. Like I said, I'm not finding the Aussie very interesting at all right now. Okay. All right. Let's take a look at the dollar index. So the dollar index, like I said, if you guys missed it earlier, the risks are this. Okay. The risks are this. We have come out of this triangle, and a couple people are like, well, how about if we draw the triangle like this? If we draw the triangle like this, is it, are we still in the triangle? Could be, but I will tell you this much: if we bounce back after durable goods orders, if they're good durables goods orders, we create a false breakdown and we closed at the highs today. Okay, that's going to create a hammer, and that will lead us back to the upper end of our triangle. Okay, and that creates a false breakdown below there. Okay, that's the risk if you're short the dollar right now. If you're short the dollar, you're stuck. You're caught. You're caught at 109 on the euro, or 108.70. That's the risk. If the durable goods orders are good. Now, if the durable goods orders are bad, a bad number, which they've consistently been bad for the last 7 or 8 readings, if the durable goods orders come in worse than expected, then the dollar is going to confirm that bearish breakdown today. Okay, so I hate to say this, but I think the dollar really hinges on today's data. I think today's data is really going to um, uh, impact what the dollar does from here. So what we have to do is just mark the lows is 96.75, and the highs here are 97.55. So 96.75 is support, 96.75, and hold on one second. All right, so the 96.75, and then we have 97.55, which would be basically the highs. We're still in a range, but if we can pop out of the bottom end of the range today with the dollar, so if the dollar can, the dollar drops below this 96.75, I think it's going to be near-term bearish, and we're gonna start seeing a little bit more, bearish in the dollar, bullish in the euro, or maybe bullish in the cable, not so bullish in the euro, maybe even bullish in the Aussie going into next week. So let's hope that the dollar breaks down today, because then that'll give us some more directionality in the market. Okay, couple things. Let's go over to